Hey there, folks. Today, let's dive into a brewing conflict that's shaking up the world of commercial real estate. It's the growing tension between banks and office owners as property values plummet. With more people working from home, the need for traditional office spaces has taken a nosedive. Now, let's break it down. The demand for office space is shrinking fast, especially in major cities. Landlords are finding it tough to keep up with their financial obligations, like paying off loans. And guess what? Banks aren't happy about it. They're worried about losses from unpaid loans and are starting to take a more aggressive stance. Imagine this. Banks are considering taking control of struggling properties from landlords who can't keep up. It's a bold move to avoid their own financial losses in this tricky economic climate. But it's not just a simple takeover. The world of commercial real estate is complex, and figuring out fair market values for these properties is a headache. This leads to disputes between banks and landlords over how bad the situation really is. So, what are the potential consequences? Well, it's a mixed bag. For landlords, losing their properties could be a massive financial hit, possibly leading to bankruptcy. This could worsen the oversupply of office space in certain areas. And for banks, seizing these properties isn't a guaranteed fix. Managing and selling them in a depressed market could be tough and expensive. Plus, it might strain the bank's relationships with clients and hurt their reputation. But it doesn't stop there. The ripple effects could hit local economies hard. Think job losses, reduced property tax revenues, and strained municipal budgets. It's a potential economic mess that could slow down recovery efforts. Now, looking ahead, the future of the commercial real estate market is pretty uncertain. Some experts are hopeful for a rebound in office space demand as the pandemic fades. Others think remote work is here to stay, which could keep the need for traditional offices low. This uncertainty makes it tough for banks and landlords to make smart decisions. So what could happen next? Well, it depends on a bunch of factors. The pace of economic recovery, the future of work arrangements, and how willing both parties are to negotiate and find common ground will all play a role. This situation highlights the need for adaptability and innovation in the commercial real estate sector. Maybe converting office spaces into residential units or co-working spaces could be a way to mitigate risks and create new opportunities. All right, that's the scoop on the clash between banks and office owners over plummeting property values. As of late 2023, the Irish commercial real estate market is experiencing notable distress. Reports indicate that many commercial loans have moved into Stage 2 arrears, which reflects a significant increase in credit risk. For instance, one bank reported a rise in Stage 2 loans from €2.3 billion to €3.7 billion, with a substantial portion attributed to commercial investment office loans. Under Irish law, banks are entitled to pursue repayment of loans, even in cases where the borrower defaults. This includes the right to enforce security on the property, which typically occurs after an event of default, such as non-payment of mortgage installments. The enforcement process may involve appointing receivers to manage and sell the secured assets. It's a story of financial struggles, complex negotiations, and an uncertain future. Thanks for tuning in and stay informed. Remember to like and subscribe. See you next time.